Hello, and thanks for tuning into the channel again. This is the US Futures Weekly Chart Analysis for the week ending 30th of December 2022. The first chart is the US Dollar Index Futures. This is the last week for the calendar year, and it's generally not a significant week in its trading. Sometimes there's a significant event that occurs during this period. It's only a 4-day trading week, but quite often many of the traders have gone on holidays and are only trading if some significant event takes place. Now, this market has broken down twice after pushing higher previously. Here's the highs of the range. Here's the breakdown bar. There was an attempt to support the market. Price broke down a second time. And in response, you can see that here the market moved lower but recovered on an increase in volume. This was an attempt to support the market. This was buying support coming in, and unless it's dumped, will probably support a push higher at some point in the future. The two bars following that was a test for supply. Now this week looks like price has moved lower, and it has done, but it's not a true breakdown bar. It's a no supply bar. It's a very low volume bar. A breakdown bar generally has increased spread and volume, and generally the volume's above average. So this was a breakdown bar here, increased spread, increased volume or higher volume, and above average volume. This was a minor breakdown bar, but it was a breakdown bar all the same. And you can see there was increased spread and increased volume. It wasn't above average in this case, and that probably accounts partly for the spread isn't as wide as, say, this bar. But it was a breakdown bar all the same, and price is now attempting to consolidate in response. I would call this week's bar an absorption bar, and I would say there was buying support on this bar, a test for supply. This was effectively a secondary test. It's a no supply bar. So we'll see what the response is. Given favourable response, this market may attempt to move higher. This is where resistance will be if it does attempt to do so. Next chart is the E-mini S&P. This is S&P 500 Index Futures. This week was a test for supply bar. This was the controlling bar on the very high volume where price attempted to go higher. The markets responded to the news, pushed lower, high volumes come out, and in response the market has absorbed supply sideways. And this market could also attempt to move higher in response given favourable trading conditions. It's reluctant to move lower, as is much of the market at the moment. There's been the opportunity to do so quite a number of times, and the market hasn't taken that opportunity. So it doesn't really want to move lower. It'll do so if forced to. That's always the case. But the market is reluctant to move lower, and there's many of the markets trading in this fashion at the moment. Next chart is the 10-year note futures. This is the US Treasury 10-year note futures. Here's the highs of the current range. Price broke out above this level, pushed up to this range, and price is effectively back at this level again right now. We saw some buying support come in down here, and price responded higher to that buying support. Now price is drifting lower. It was a bit of a nothing bar this week. It was very low volume. Spread narrowed in response to that lower volume, and prices come back to where there was a little absorption bar here after price accelerated higher on this bar. So the market didn't accelerate lower. It could have done so if it chose to. The opportunity was certainly there. It didn't do so. It's just another market that's reluctant to move lower at the moment. Copper price futures saw some absorption and accumulation throughout this period here. There's a little shelf through here that sort of formed the breakout line. This is where resistance came in here, price pulled back, went through a period of accumulation or buying support. Then there was a breakout. I was a bit disappointed initially with this consolidation period, which was quite deep considering. Price has responded higher since and is now consolidating in a much tighter and higher range, which is generally suggesting that the underlying market sentiment is relatively strong. Now, the breakdown line is here. This is the previous breakdown line, the older breakdown line. It will likely last up to there. This is where resistance will be above if price does attempt to move higher. And it appears that it probably will attempt to do so at some point. Overhead resistance is there's likely to be selling pressure within this zone here. You've got another zone above that, but I think that's less likely to hold as much supply at the moment. We'll see. There's a little gap there as well that we can take note of, and that lines up with this bar's close pretty well and the high. Next chart is gold price futures, which have some accumulation in the background, similar to the copper price futures. You've got accumulation through here. Here was the breakout bar, little test for supply through here, and price is pushing higher. Now, here's your breakdown line previously, and this is where resistance will likely be within this zone. You can see that price is moving up to and possibly going to attempt to absorb its way through. Generally, there's two ways through these zones. There's either a gap up and acceleration through, or price attempts to absorb over a period of time its way through, and price trades through like this before it pushes higher. The next zone above that is likely to be through here. So I don't see any serious issue at the moment. This week was a shortened trading week. Volumes were reduced because people were on holidays, and you had a narrow spread up bar in response. While that appears to be a no demand bar, there's no weakness in the immediate background. If anything, you've got strength in the background. You've got a cause and an effect, and the narrow spread up bar may look like a no demand bar, but I wouldn't treat it as such at this point in time. It's more likely the market getting ready to move through a period of bullish absorption to work its way through this potential resistance zone to the left. Silver price futures, similar to copper and gold to some extent, have buying support in the background. Here's the older breakdown line. Here's the breakdown line above that. You may even have a line going through there, which pretty much lines up with it, I guess. Here was the breakout of the zone, a test for supply, an acceleration higher, and similar to gold in some respects, you've got the market setting up for what appears to be a period of bullish absorption. This is the zone above through here. This breakdown line here has the highs of the range there, so you can see this bar accelerated up through this zone, and now the market's moving up to the lows of this range above. And same with the gold market. Price could either gap and accelerate higher, or it could begin a period of bullish absorption where the market moves higher and lower like this, working its way slowly through the potential resistance to the left. And that's perhaps the more likely scenario at this point in time. Next chart is light crude price futures, which have been a very awkward chart for some time. It's looked like it was going to break out a number of times previously. There's the lows of the old range, which correspond nicely with the highs of the current range. You've had another price breakdown here. In the background, this is where buying support came in previously, here, and price moved into that zone of previous buying support and did find support again and is now moving higher. This week's bar is a pretty much classic test for supply. It's closed as an up bar, and that just suggests there's a little bit of enthusiasm in the market. Selling pressure was relatively low in that case, because generally a test for supply is a narrow spread down bar, closing mid to high on low and potentially below average volume. And that's pretty much exactly what you've got, except the market closed as a slight up bar. So it tested for supply all week, and because there was very little supply in the market, it's popped up and closed as a slight up bar for the week. This is the level here at 82, where the breakdown recently occurred. A push above that level would probably be significant. A minor significance, there may be a test. A breakout above this level would be much more significant, which is at 94. Just have to wait and see. What you might end up seeing is price moving sideways and going through a long period of consolidation, perhaps between 70 and 80, roughly, 70 and 82. That would make some sense. You'd have price trading through here like this for an extended period. We'll see what the response is next week. Aussie dollar currency futures are back at that 68-cent level, where minor support was previously found in the past. Is the overhead resistance, where price found some support previously, broke down, and now price is moving back up to this level. The stronger level in the past has been the 70-cent level, but this market is sort of moving the inverse to the US dollar index. So if there's strength found in that market, you'll find this market will move lower in response. And if the US dollar index continues lower, this market may actually move up to the 70-cent level. We'll just wait and see. There's obviously some fundamentals that also play a part in this market, but the US dollar itself does play a significant part in the price movement of this currency pair. Bitcoin futures are continuing to move away from this significant event in the past. It was always going to take some time for the market to do so. There's the lines where resistance may be found in the future. Now, you'll notice back here, increased volume came in, but the market did not move lower in response. So that suggested that there was buying support in the market. This week, you've had the highest volume for the last 5 weeks. Price did move slightly lower while that was occurring. Watch for the response next week. If the market moves lower in response, particularly if the market moved below 915 or the lows of this range, that would be a significant event. But if the market continues to move sideways or even moves higher in response, that would suggest that further buying has happened in this market. And this volume, this increase in volume, was buying support coming in. We'll just have to wait and see for the response to confirm it. It appears that's the case right now, but generally the response within a bar or two will tell you, and often you need to look at what didn't happen. So if the market doesn't go lower in response to this higher volume that's come in, it'll generally tell you that some buying support has come in response. So we'll just see what happens. I'm expecting it's buying support. We need that to be confirmed in the next week or so. Okay, just quickly back to the US dollar index to finish. It does look actually somewhat like a falling wedge here, which some would say suggests that the market will go higher in response. And to be honest, that's what it looks like as far as the trading goes. price broke down here. There was a response higher, and this looks like good buying support came in here, and the following two bars are test for supply. So it does appear that this market may attempt to move higher in response. The breakdown line above is at 106 or thereabouts. So that's where I would look at price moving to initially. A break above 106, a clear break above 106 would likely be significant, and a stall out at 106 and push back down to 104 or below that would also be significant. These are going to be levels worth watching in the near term. Okay, that's my lot. Hopefully it was worthwhile watching. That's the last weekly chart analysis for this year. We'll be back next year to start the new year. I hope the new year is successful for everyone watching the videos. Thanks for tuning in. Thank you. See ya.